Hello everybody, this is Matador from freetradingvideos.com. It's Friday, December 4th, 2009, and we are looking at a slew of economic data coming out at 8:30 Eastern Standard Time, including non-farm payrolls, unemployment rate, average work week, hourly earnings, and at 10 o'clock we have factory orders. So we're going to again watch how the markets digest that. There's a 15-minute chart of the S&P ETF, the spiders, with pre- and post-market data. And we saw yesterday a nice brief run-up into the 112 mark, a pretty good size sell-off with volume that did a more than 100% retracement of that move. And then a lower swing high right about the 50-yard line. And we talked about the need for a break above the 50-yard line with good confirmation of the market internals before we went long in the markets. And that ended up forming sort of this lowish base here and then resolving to the downside in what looks like a dramatic fashion on a smaller time frame. Looking at higher time frames, that is a significant bar with really good sized volume, and but we are still up above this 110 mark that we talked about on the daily chart, where I was hoping that we would chop around and hold up. With volume print like this on the intraday chart, sometimes it behooves you to go out and look and see what the daily print was, and it was not that significant, so it's there. Yeah, there's volume to it, but I'm going to definitely watch very closely how the markets digest whatever news we get at 8:30 and then at 10 o'clock especially. Right now the futures, you can see, are just popping up a little bit of a gap up right where we closed yesterday, above the 110.40 mark. Zooming into a 3-minute chart, if I kind of zoom in and out of here, let me just scroll back. I can even remove that pre and post market data real quick. There we go. This 111 mark, which was support, when that finally broke, it tried to hold as support here. Even the 111.20 mark was a fantastic area of support for a while that just ended up giving it up. So that support, once broken, became resistance. Tried like crazy to hold here, headed south on higher volume. When I look at that on a higher time frame, that is almost a perfect gap fill, at least to the 50-yard line. So 110 is still the number I'm going to want to see hold, and pretty good size volume here on the decline. So be careful again how you choose to go long these markets until you get some good confirmation. So good stuff for everybody. Let's take a look at how the trend closed. It was divergent from the trend Q yesterday, if you remember, and we were seeing moves up into the 1.5 area, and looks like we closed around 1.33, so some volume flowing into stocks on the decline, but not overly dramatic. The trend Q popped back up, but still just barely above the lowest limit of the neutral range for the trend Q. The VIX, oftentimes a good tiebreaker, of course, and we did talk about this as well. This symmetrical triangle did resolve after this high base intraday to the upside in dramatic fashion, at least on a 3-minute chart. On a higher time frame, you can see what we're running into. Very, very nice move to the upside on that, confirming the sell-off. And so when I look at the VIX, even on a 60-minute chart, you can measure these retracements like this and compare that to what the S&P did. And you can see that the VIX from point A to point B retraced about 23%, while the spiders from point A to point B retraced about the same. So that's good confirmation. So good stuff, everybody. Hope you have a great trading day, and it's been fun working with you this week so far. I'll talk to you around noon Eastern Standard Time to see how things are shaping up in the markets.